everyone. Welcome to today's live stream. I'm going to talk about SQY and the underlying square or block stock and potential outlooks for 2024. So SQY is one of the yield max alternative funds to Tesla, and it's a fund that we were all hoping would have a really good year. So far, it's gotten beat up in the first month of the year, but I want to look at some charts and stuff and some info and see. We're going to look at the underlying and see what we might expect for the year 2024. Obviously, the performance of SQY depends heavily on the performance of the underlying, the SQ. So let's go to Yahoo Finance and look at some charts here and stuff. And again, just like with Tesla, this is going to be real info. This isn't going to be pie in the sky. There will be no misinformation, no false positives, but no false negatives either. Just realism. So, all right, let's go ahead and share the screen here. And feel free to comment away for everybody that joins with any questions, any concerns. So let's see. So we were definitely really kicking butt in this one for the first few months that it existed. And I think a lot of us were really expecting a big year in the fund. So here we go. As far as tomorrow, we're only up in the futures for the NASDAQ. Everything else appears to be down. So let's just go through the history of Block, which also was known as Square. Friday, we were up 2.26 or $2.26. The stock has been trading since 2015. Obviously, this was a great buy in 2015. And then as we look at the chart going all the way 2018, we started seeing it run up. We got all the way to $94. And the product, obviously, it looks very sleek. I mean, you've got the really cool looking payment processors that many businesses are using. And obviously, just because something looks cool isn't necessarily a reason to invest in it. We're going to look at the cash flow statement and the balance sheet and the income statement. We're going to do some in-depth analysis on Block so that hopefully we're not going to be blockheads when making a decision on investing in this company. Obviously, in 2020, when the pandemic started, we dropped to $38 all the way from 81. And then we really surged when all the stimmy checks were going around and stuff. By February 8th of 21, we were all the way up to 273. And sadly, there are a lot of people that bought in at that price and are way down. And then we were at 268 here. And not trying to give a history lesson, but knowing the history is very important to build up to what we're going to ultimately conclude on this one. In the environment we see in the middle of the chart here, obviously the Fed was cutting interest rates. They cut interest rates all the way down to zero, and we're pumping massive amounts of money into the economy. And there was like 3 stimulus checks that were sent out. So if we get back to an easy money situation, we could definitely see runs up in the stock as well. And then basically when the stock, when it was expected after inflation really started ramping up in late 2021 and the Fed started raising interest rates, we started really plummeting in 2022. We had dropped all the way down to $51. And we dropped further as we got into 2023. We dropped all the way down to, back in October, we were down to $43. So this stock actually just started to recover. We were down to 40.02 actually. And so within the last year, we're still down from where we were like a year ago. We're down like $20 actually. So the 1-year target estimate on here is $80.49, but we're not going to go by that. That's just someone's calculation, basically, that works for Yahoo. So around Christmas Day, we had gotten all the way to $77.35, but we've dropped from there. Now, SQY did pay out some significant dividends, which were very impressive. I think one of them was like $2.14. But we're going to delve more in depth on this channel, and we're going to start diving in more in depth. We're not just going to be fanboys of these funds. And that's a good thing. You know, objectivity is very important. So the first thing we want to look at, and we're looking at stuff that really anybody can look at right now, not doing too much in depth, but we're going to get into the statements in a second. Q4 2022 earnings were missed. They've beat in the last 3 quarters. Earnings are expected out February 22nd. So if they miss that, we could see the stock drop further. Let's go in and look at some actual statements, some actual financials. PE ratio is giving us an NA. The market cap is at 40 billion. So nowhere near a lot of other peer companies. So what pops out to me on the income statement? The companies definitely grew revenue from 2020 to 2021. I mean, they pretty much doubled. But then we stayed flat. We actually dropped a little bit in 2022. The trailing 12 months, 20, you see here in units of thousands. So this was almost, I want to say like 21 million because it's in units of thousands. Let's look at quarterly so we see more data from 2023. So by quarter, we did a little bit better first quarter 23 than we did in 22. And then we did better in the second quarter, and the third quarter we did slightly better, but we started to plateau. Cost of revenue has increased as well, but it's not like small cap companies where you see it exponentially grow when it starts out like really low. Operating expenses, pre-tax, EPS here is negative, even diluted EPS. Shares fluctuated a bit, which could suggest some activities going on there. Net income from continuing, and we can't see, continuing and discontinued operations was negative. EBIT was negative every quarter. That's not a good sign. EBITDA was only positive in 2 of the 4 quarters listed here. Reconciled cost of revenue, depreciation, normalized EBITDA. Okay, so there is that. And then one of my favorite newer items I'm starting to see, well, not newer, but I've just noticed that the last few companies I've looked at, could just be coincidence, but tax effect of unusual items. We have a negative there for 1 quarter and the trailing 12 months actually. Okay, so let's let me circle back to comments here for a second, just check how we're doing. Don't want to leave any of you hanging. I actually don't think we have any at the moment. No, we don't. Okay, well, this is a dry subject matter, so you know I can understand. Okay, so now we will go over to the balance sheet, and then the most important one will be the cash flow statement. And this is important, you know, if we're going to invest in these yield max funds, to understand the underlying as well. Okay, so we won't spend too much time on this. We've got total assets, total liabilities, and any of you that have studied accounting know these are supposed to line up. Here's common stock equity, working capital, tangible book value. Warren Buffett likes that. He likes definitely low price to book value. Shares issued. The shares issued, it looks like they issued more shares in the year 22. Ordinary share number matches the number of shares issued. So there's a lot of stuff you can do with these numbers if you really start delving in and playing around. Okay, let's see what else here. Okay, I went to the by quarter. Okay, so we still don't have Q4. That's going to be coming soon. Trailing 12 months, 612, 841 for number of shares. All right, now let's go to the cash flow statement. And let's see. So cash flow. Okay, so there's some concerning red flags here when it comes to free cash flow. For trailing 12 months, it's saying positive. For 2022, it was almost flat. No cash flow is never a good sign for a business. Repayment of debt, they had some significant debts to be repaid there. 2021, they had a good cash flow. 22, they didn't. 2020, they were negative, but the stock still ran up in 2020. And sometimes you are going to see markets where the fundamentals are completely divorced from the reality of the stock price. I think we're getting back to where that's not as much of the case. You know, there's definitely been a correction over the last 2 years, but 2020 market, it seemed like some of the fundamentals were completely divorced from the price of some of these stocks we saw. And we noticed that especially like with Tesla. Let me look at the quarterly here. And we'll get off the dry material in a second. And we'll look at dividends and stuff like that. Okay, so by quarter. So yeah, last quarter of 22 was negative. March was decent in terms of free cash flow. June was lower. Pretty good quarter ending in September 30th. And then the trailing 12 months is basically adding, you know, all of these up for the last trailing 12 months, hence the name. It's a good positive cash flow, but there are definitely some red flags with this company. So as far as it getting back to its 2021 highs, that could be a tall task. Now we're going to look at SQY. Again, a lot of this is going to depend on macroeconomic factors. It's going to depend on what the Fed does and things like that. Let me go and see if any of you want to join in the Discord. I forgot to actually try to stream there, but I'll do that now. Let's see. Okay, I'm going to go back to my main channel here, and then we will start the stream there. But for now, we're looking at the screen on Yahoo Finance of the SQY, which is 2069 as of close of trading Friday. So we were up 2.25% actually. And okay, let me scroll down here to the general live streams. And you all should be able to hear me voice connected in the Discord now. So for any of you that want to join the Discord that haven't yet, definitely feel free to join. We're an open, honest, and free community. There will be no censorship unless somebody just does something really stupid, like, you know, and that has happened before, or unless somebody tries to, you know, dox the coach or something like that, then your comment would be deleted. But I try very hard to not ban anybody. And definitely no one will be banned on my Discord for trying to be helpful, sharing truth, and shedding light on things for the audience. So anybody that wants to join, definitely. We have the link in the... we actually, so it's a very interesting time to be joining the Discord now. So Andre, one of my podcast co-hosts, did a portfolio review of Khmer's portfolio actually, and he did a pretty good job breaking down everything. So that's interesting. So anybody that wants to see that, that's actually, I'm just reading here. He shared that on the Discord here. So anyway, we'll be having some fun, that's for sure. All right, back to the topic at hand. Okay, so SQY. So what are we going to do? I don't have the advanced financial forecasting equipment with me today, but we will make our best guess as far as, so again, let's do another quick history lesson. This went public in October. We're flat pretty much. The good thing, unlike Tesla, we're not actually down in the principal. For those of you that bought in from inception, we're not down, we're flat. But those of you that say bought in December and we're dollar cost averaging as it ran up, you might be down. 2664, December 28th, the 52-week range, the low point was 1741, which was around here. October 30th, the Halloween lows, that's what I call it. And then 2670 was the high point. So we would only have to get back, I mean, we would have to go up $6, almost $7 to get back to all-time highs. And if we did that, I mean, we would really be rolling. But the dividends that this paid out in those 2 months, November and December, especially in November, was because of such a great run-up that SQY had, or excuse me, SQ, and not so much the great run up, but how it happened, the pace of it. So especially from here, from the end of October to the end of November, the fund gained like $10 a share. So we were up like 30% in the principal, and we were getting, I believe, annualized 100% dividends. When that happens, it's beautiful. When that happens, I'll be YieldMax's biggest cheerleader. And it's going to be an ebb and flow. I mean, we're not always going to be positive, but investors have to consider, how much they're putting in, what percentage of their portfolio. Like for me, I don't go over 10% in these types of funds. That way, if I lose it all, worst case scenario, I still got the other 90%. Do I want to lose anything? Absolutely not. But honestly, like I say, when these funds are doing great, I'll be the biggest cheerleader. And I mean, Jay was nailing it. He was hitting it out of the park with these, especially for those 2 months. Of course, when the underlying does what you want it to, it all works out very well. And that's what we want. But I'm not down on this one per se. I just see a lot of red flags with the fundamentals of block stock. So, and I don't want any of us to be blockheads buying this maybe blindly or putting too much in. I don't want to see anybody lose their money. So, okay, at the end of December, 2660. Let's review the dividends again. As far as the 2024 outlook on this, there's a lot up in the air. Again, we're in an election year. I think we are going to see the Fed cut interest rates possibly by the end of the first quarter. Once the interest rates start cutting, this honestly may be a buying point for Square or SQY. I keep calling it Square, but it's block stock. But SQY is the underlying. SQY is the YieldMax ETF for this one. So again, there's a lot of, I don't want to say ambiguity, but there's a lot still to be decided. There's a lot up in the air. There's a lot of variables depending on when the Fed starts cutting rates. Once the rates start cutting, I think the floodgates are going to open for the market. I think we'll end up having a very good year for the market. Okay, so we're 2069 again for the price, and the after hours were up. If we look at dividends only, I think we're about to start a new month, by the way. Speaking of that, I don't honestly give a crap about the teams that are in the Super Bowl. I was kind of rooting for the Lions, but they blew it, unfortunately. They were doing great in the first half, but I have a feeling, I guess, Kansas City is going to win again. They're like the new Patriots, and they want Mahomes to break all of Tom Brady's records, of course. So he's the new face of the NFL. He's good. I like him, but they just really seem to want to, they want Brady to be in the past, and of course, have the new face of the NFL set all the records, but outside of our control, right? Anyway, okay, so November 8th, we didn't have too great of a dividend, but then we had a whopping $2.14 in December, and then January we had $1.62, which was still phenomenal. And again, that was because of, if we go back to block stock and look at how it performed, a lot of that had to do with the performance of block stock. Okay, we are getting some comments now. Good. There is a pulse in the live stream. Okay, and that's always good when there's a pulse. That's what we want. We like to have a pulse in our accounts too. Okay, so if I go back to the last 6 months, the run-up started here. So we harvested some really good premiums if we were in Square from here to here. So the run-up from 39.22 all the way to 79.60. So basically, this stock doubled in like 2 months. And because of the doubling, which is like 100% gain, we saw some really beautiful dividends in this one. And I believe that right now the fundamentals may not quite be there for this to be set up to happen right now. But again, like I said yesterday, and I'm trying to ease in some economics here, you've got microeconomic factors and you've got macroeconomic factors. You've got firm-specific factors and systematic or market-wide things as well. That's something actually that beta measures. And the beta of 2.56 here suggests it's riskier compared to the overall market. But some of us like risk, right? Just not in our whole portfolio. So, moral of the story, once those rates start getting cut, we could see this soar, not based on current fundamentals, but based on macroeconomic factors. And once that happens, we could end up having a very good year. So like I said, would I buy this? Well, I already did. I bought in at the beginning of the year. I'm actually down because we've been dropping in the month of January so far. So the whole thing that happened with Charles Schwab and the delay in the investing of the Roth IRA contribution actually worked out in my favor, actually, because it delayed me from buying at an even higher price. So let's look again before we end here. Let's look how far we've dropped so far in January. I mean, we know the price in the current price versus where we were at the end of 2023. So we know those numbers, but let's just, so we know like the what, but we want to look at the why a little bit further. Okay. Why do I keep going back to the stock? Come on, coach. All right. SQY 2069. Okay. 6 months here. So it's about right on par with the NAV. Again, so if we look at, we're just going to do 1 month, actually, not 6 months. So we were here, we were kind of on top of the mountain here, 2653. We've been dropping. So if you bought like in the first week of January or so, you're not doing too bad. I mean, you've only lost maybe $1 or $2 per share. So, and that's another thing we got to start doing, projecting dividends too for the upcoming month. So if you got in here, really since the first week of the year, we haven't lost too much more. But let's look again at Square. Now I do want to go back to the stock, and we'll get to all the comments here at the end. But let's see. Okay. So Square. I keep doing that. It's Block. Okay. Year to date. So how will our dividend? We may not have too great of a dividend in this one, actually, because of the fund dropping. I mean, we've dropped from $73 at the beginning of the month all the way. We were down to 62, but we've recovered a little bit. We've still got, so tomorrow's the 29th, so 29, 30. We've got 3 days. And by the way, on Wednesday, Papa Powell speaks, I believe. If you all were with me yesterday in the live stream, we looked at the Forex calendar. So Papa Powell, there's going to be an FOMC meeting, and then Papa Powell is going to speak. So that could be a jolt for the market. So there's some hope that we could squeeze out a few more bucks in recovery for Block, and maybe we'll salvage some kind of a dividend, but we'll see. As far as my outlook for 2024, a lot of it really rides on the interest rate situation. I'm thinking they're going to cut, but who knows? Papa Powell's very unpredictable. If we've pretty much had the soft landing we're looking for. I think inflation's still too high, but you know the media is not going to talk about it too much this year anyway for obvious reasons. But there's a chance we could actually not even have a rate cut. So if we do, like I say, a lot is going to hinge on that. All right, let's do some comments. New investor, I love it. New investor attends every live stream. He's attending class every day. That's how you become good at this, right? That's how you become an experienced investor, by attending class every day. That's awesome. Good for you. TD Travels is on. Good evening. Good evening to you as well. Let's see what you said here. What do you mean by lose it all? Wouldn't that only happen in the event that the underlying goes bankrupt? When did I say that? I probably said that at some point in the video. Oh, I'm saying like a worst case scenario, which probably won't happen. Like, you know, people that are doom and gloom, they talk about things that have a low probability of happening. I'm not doom and gloom. I'm not necessarily pie in the sky either. I'm somewhere in between the two extremes, which I wish more of us could be like, because everything's so like one extreme or the other these days. But I was saying if worst came to worst, it would be no more than 10% of my portfolio that would potentially get wiped out. But do I see that happening? Absolutely not. There would be a lot of things that would happen before then, reverse splits, so on and so forth. You all know I'm not a huge fan of reverse splits, but it wouldn't be the absolute end, so to speak. There's no they. Mahomes and the Chiefs won fair and square. I don't know what you're saying. Oh, no. Look, they're a good team, no question. I just, I don't know. I guess I kind of walked into that one, didn't I? It's a finance channel, not a sports channel. It just, a lot of people hated the Patriots because they won for years and years, and I just kind of see the same thing taking shape with the Chiefs. And obviously, Mahomes is the new face of the NFL. That's good. He's a good player, certainly. He's got a lot. He's a good role model for the kids and whatnot. I mean, I'm a Bucks fan. I was happy when Tom Brady was here for a couple of years and won a Super Bowl here. But I'm not a huge fan of the same team winning all the time. If it was my Bucks, I might feel differently. But it feels like we're seeing the same thing with that we saw with the Patriots. So anyway, but yeah, I mean, good win for them. Of course, there's a pulse. I'm staying up to watch this, Coach. Good for you. I'm always glad when you're on. Oh, Dissector disagrees with you a little bit. He thinks Packers should be in the Super Bowl. Well, they had a good run. I'll say they had a good run. They probably exceeded expectations. How does Square make money? Well, there's supposed to be a payments processing system. That's actually a good question that I don't know if I could answer off the top of my head. They don't charge a fee, but I would imagine by vendors using their product, they have to make money that way. Oh, Jordan Love is the new face of the league. Oh, Buffalo. Oh, you're in Buffalo, and are you a Chiefs fan or what? Oh, you hated the Patriots. You're just saying the Chiefs won fair and square. Well, I actually, the Bills and the Lions, I kind of root for the underdogs. I would have liked to see the Bills and the Lions make the Super Bowl, and I would really like to see both of those teams get the Super Bowl because they've never gotten one. The Bills obviously have been to 4. If they could just get a darn kicker, how many times are kickers going to cost them big games? I mean, obviously that happened in the 90s with, who was it? Norwood, wide right. And then they had the freaking kicker miss a big kick that could have tied the game last week. But anyway, oh well. You're a Chiefs fan and from Buffalo. Well, don't tell your fellow Bills that. That's Buffalo's really behind their team for sure. And here in Florida, we actually have a big. I actually like the Bills. They're like my AFC team. I have a Bills shirt and stuff. I go to the Bills club on Sundays. Sometimes I've made a lot of friends with Bills fans. They're good people. I will say I get more feedback on my Bills shirt than my Bucks shirts. Anyway, let's see. Do you know of any website that lists every single stock and ETF in the United States? Yeah, there's ETF database, but it depends. Do you want to look at them all line by line? And as far as stocks, you can just go. You should be able to find Google what all's in the S&P, what all's in the NASDAQ, and then just search the list there. It's a lot of info though. You're going to be poring over that for a while. Bills fans are insufferable. They make it their whole personality. Yeah, but of fans, I would have to say they're polite for the most part. I did get booed when I wore a Tom Brady jersey into a Bills club one time. That probably wasn't the greatest idea on my part. But it was a Bucks jersey. It wasn't like it was a Patriots jersey. If it was a Patriots jersey, they probably would have picked me up by the arms and literally thrown me out. So I'm glad I didn't do that. Let's see here. I like Seeking Alpha Premium. It has most stocks. So I'm actually applying on the podcast. Me, Blake, and Andre. I think Blake has it already, but Andre and I have applied for Seeking Alpha affiliate status. They did get back to me, but it's still pending right now. They're supposed to send me a contract to sign. Once I get that, I'll have more access to stuff within Seeking Alpha. I do agree. I like it. So you want a listing of them all? I want more comprehensive than the S&P or NASDAQ. I would like to go through every single stock that's publicly traded. Good. Well, that's good. You're starting out right. You're asking the right questions, certainly. All right. So as far as what's up next, let me put the Discord link just in case. I'm seeing mostly regulars on here right now, but if anybody hasn't joined Discord yet, let me go back to that. We'll just make it an even 30 minutes. And then as far as the plan, I'm going to try to do a video breaking down Coney. There's another video that I have planned as well. I don't know if I want to announce it yet because I don't want any nefarious behavior from other channels. But yeah, let's see. Okay. Okay. Voice connected in the Discord. Hold on just a second here. So that's me. New mentions. I got new mentions in my Discord. That's good, right? Okay, let me, I should have this link at the ready, but let me go back here for a second, and I'll just put this link for you guys and gals. You know, the audience is still like 98% male. There are a few women that watch, but they don't usually comment. Well, there's one, actually, I think Sonia, she comments a lot. She's very knowledgeable, a lot of experience. Okay, let's see now. Oh, another Tesla channel popping up. Everybody's trying to be on that bandwagon, aren't they? Okay, bear with me here. So the Discord link is in the community tab on YouTube, but I want to give it to you all again for those of you that have joined live. And like I said, I'm definitely ramping up. I've been saying 3 to 5 uploads a day. Didn't quite have that happen today, but that is what I intend to do. Intentions don't always become reality, but hopefully, hopefully we will. Okay, I'm not gonna rehash this post that I made again a couple days ago. I'm just trying to scroll here so I can actually get the link. All right, let's see. Okay. Oh, wrong one. I got StreamYard open twice. Bear with me here. Bear with me. I'm gonna put the link up, and then we will end it, and then I'm gonna hopefully be back for another one very soon. Okay, here we go. New comments. What do we have here? Is the podcast? Yeah, Brewing Great Returns. So let me type that in again. Please feel free to subscribe. We've got a very solid portfolio breakdown of the channel I mentioned. Andre did a great job on that one. And we're also going to be coming up with some interesting things as far as grading these ETFs too. So it's Brewing Great Returns with a $sign for the podcast. All right, I got to take this bait. You got kicked out of a Tesla server. Well, I didn't know it was exclusively a Tesla server, but I guess it might as well be. I actually got some comments deleted on there as well. I'm honestly not too happy the way things have gone. Me and that channel, we were cordial to each other. I guess I'll just go ahead and air this out. Why not? Me and that channel, we were cordial to each other. I've been getting very annoyed lately. Well, the first thing that happened, he live streamed my Jay interview. And I honestly think there's a lot of misinformation, pie in the sky going around on that channel. You've got a lot of people just promising, well, I don't want to use the term promising. They're not, I would say, guaranteeing anything, but there's just a lot of pie in the sky, a lot of unrealistic things going on. And then, of course, Blake went on there and tried to, talk some sense and was very sensible and actually was giving helpful tips on ways to hedge these, and then got kicked out. And then I know I've had stuff deleted, and it was said that I disrespected Jay, which I don't appreciate. I never disrespected Jay, just because, let me ask you, like, if you sold me something and I said I wanted to go sell it, is that being disrespectful? Like, if you gave me a Jordan Love jersey and then I said I'm going to go sell it instead of holding, does that mean I disrespected you? No, but that was basically the argument. It's that, okay, I hold yield max funds, I hold Tesla, and I said if it gets back to $18 a share, I would sell some of it. That's not being disrespectful. Honestly, the guy likes hard-hitting interviews. But anyway, enough drama. Hey, I can't disagree with you. But anyway, check out Andre's portfolio review on the podcast. Definitely subscribe to it. We definitely had fun with that one. We'll see where things go. YouTube is always a fun game, of course. I've never had... oh, you know what? I'm ranting again. I've never had another channel where we stepped on each other's toes, but I didn't want that to happen, but I guess sometimes you're just on a collision course and things are inevitable. But anyway, we're always going to preach realism here. Yeah, for sure, right? Investing drama. Who would have thought such a dry subject like finance could have so much drama involved, right? By the way, we did have a very interesting guest on today's podcast. We just shot it today, but it's obviously got to be edited and stuff like that. And I'll let it be a surprise, but we could actually be breaking into another very popular subsegment of YouTube, which would be very welcome. These guys are actually boglehead investors, which I consider myself too. The bulk of my portfolio is in index funds. So we had a really interesting discussion with, actually his name's Jay Nagy. And if we, you know, if we kind of merge ideas with that crowd, like I said, I've been a Yield Max channel, but I don't want to mislead people or anything. Like I say, the stuff that we're able to talk about on here, the most interesting stuff is stuff I would only speculate with maybe 10% of my portfolio. The other stuff's really dry material, but the 90% is like dry material, but the 10% is the stuff that actually gets views. So let's see here. What does VOO yield? 70%. Oh, I'm not sure. Not buying. I thought that was a more stable, like one of the total market index funds or something. Anyway, here's the Discord link again for those of you that don't have it. And yeah, definitely feel free to join that. Everybody's welcome, of course. And our podcast channel, definitely feel free to join that as well. And then let's do this here. I know. Yeah, it's well, here's the thing, right? If it fell in half, remember the dividend paradox. If the fund is trading at $20 a share and it pays a $5 dividend, that's a 25% dividend. But then if the fund falls to $10, whoa, suddenly the dividend is 50%. So the dividend percentage doubled, but hey, you just lost half of your principal. Now I have a feeling other investing communities, which shall not be named, would be all excited for that, 50% yield, but wait a minute, we just lost 50% of our principal. So yeah, I kind of get your joke there. Oh, welcome, Mr. Sean, welcome. Yeah, VOO is the S&P. That's what I thought. It's one of the Vanguard index funds. That's a good one for sure. I have other S&P funds because they're through employers. So I haven't, Vanguard's the one fund family I haven't actually touched, but I've used Fidelity, I've used BlackRock. Like I say, a lot of index funds, they kind of all do the same thing. I know a lot of people like Vanguard. I'm not opposed to it. I'd probably buy into some Vanguard. And also as a broker, I haven't tried them, but I definitely would be open to it. All right, you all keep an eye out for the next live stream. We're going to analyze Coney next. So hang out here. I'm going to get that link created and we will be on very soon. Yeah, VOO SCHG is another good one that I might have sold for foolishly, but yeah, that's a good one too. So keep an eye out. That next link's going to be available very soon. Thank you all. Take care. See you soon. Ciao, ciao.